All right, so let's get started. Evening to you all. You're welcome to tonight's weekly market outlook session. I hope I'm audible. Can you hear me clearly? Any noise in the background? Please let me know. Is there any noise in the background? Michael, please unmute your mic. If there's no noise at your end, Michael, unmute your mic. I need someone to be giving me feedback. Michael, unmute your mic. If there's no noise at your end. Michael, unmute your mic. Mr. David, please unmute your mic. Mr. David, can you hear me? Okay, let's get started. Please unmute your mic, Mr. David, if you can hear me. I've granted the permission. Okay, so let's get started. For those who are new, it's the first time joining the class. There are three things. First, I'd like to let you know that Forex trading is risky. If you're not willing to take above average risk, you shouldn't be trading Forex. I like to say it the way it is. It is very risky and it is very rewarding. If you're not willing to take risk, you shouldn't be trading Forex. The interesting thing about Forex is that you can define the risk you want to take in the market. By that, I mean calculated risk. Okay? If you're experienced, you know what risk you're to take. Okay? So what we take in the market is what? Calculated risk. Okay, and there are three things you should know before you trade Forex. You should know the trend, how to define the trend of the market, know the risk involved, and also the reward. Before you execute any trade, these are the three major things you need to know. The trend. If you cannot identify the trend of the market, you shouldn't execute that trade. That's the first thing. And there are three types of trend. We have the bullish, bearish, and sideways trend. If the trend is bullish, you want to buy. If the trend is bearish, you want to sell. If the trend is sideways, you might want to stay out of the market. Okay, because when the trend is ranging, price is neither bullish nor bearish, and it is very difficult to make money in such market. It is when the market is trending, bullish or bearish, very easy to make good profit in the market. So you need to know the trend. The next thing you need to know is the risk. You need to know the dollar amount you would lose on a trade before you execute it. And you're advised not to lose or risk more than 1 to 2%. If you're not an experienced trader, you shouldn't risk more than 1%. If you're an experienced trader, you can risk 2, 3, or even 5% of your account on every trade. But you be sure that the risk you're taking, you're comfortable with it. Okay? That I'm taking 5% risk, 10% risk on a trade doesn't mean you have to take the same risk. Okay? So you must be comfortable with whatever risk you're taking in the market. And for every trade you're executing, there's a potential reward on every trade because you're taking a risk. And if you're taking a risk, there must be a reward. Okay? So you should also know how much you're going to make on every trade you execute in the market. And if you want to be a profitable trader, long run, I advise that your risk reward should not go below 1:1.5. Okay? Your risk reward should not go below 1:1.5. What does that mean? If you're risking $1 on a trade, your profit target should not go below $1.5. So if you are risking $10, your profit target should be at least $15 minimum. Okay? risk reward 1:1.5. Okay, so how do you define the trend of the market? You define the trend of the market using technical indicators or fundamental indicators. Okay, you either use technical indicators or fundamental indicators, and there are thousands of indicators, technical indicators out there. So you need to pick one of those indicators, study it, apply it on the chart, then see how it has worked in the past. Okay, because in technical analysis, we believe what has happened in the past has a high probability of repeating itself in the future. That is what technical analysis is all about. We look at what price has done in the past, we study price history, and with that knowledge, we are able to some extent predict what price will do in the future. Okay, so I'm a technical trader. I use more of technical tools, technical indicators to analyze the market. But it's also important that you have an idea of fundamentals, okay? Have an idea of fundamentals, because the fundamental also play a major role in the market. Okay, so don't just focus on your technicals. You should know what is happening all around the world. It's very important. Okay, you would see for some period now, gold has been bullish. Gold has been bullish for months. And what's the reason for the bullishness on gold? The ongoing war is the reason for the bullishness. There's so much uncertainty all around the world. And in such cases, people would want to invest in what we call safe haven. Safe haven. They want to invest their money in safe haven because they are not sure of what is going to happen tomorrow. And they believe gold is a safe haven because for over the years, gold has always appreciated in value. Okay, it has always appreciated in value. So people believe so much in gold. So when there is so much uncertainty all around the world, people buy gold. And that is why gold has been gaining value. It has been bullish for months, and it's still bullish. It is still bullish. Gold is still bullish. It might pull back, but it will continue with its what? Bullish move. Okay, we might just see pullback on gold, but fundamentally, gold is bullish. Okay, so the first thing I look out when analyzing the markets for the week is the dollar index. Okay, that's the first thing I look at. I want to know the strength of dollar. As you know, dollar is king. Dollar is king. For GBPUSD to be bullish, Australian dollar USD to be bullish, New Zealand USD to be bullish, you need to know the strength of the dollar. If dollar is strong, then you should expect all these pairs to go bearish. If dollar is weak, you would expect these four pairs I just mentioned to go bullish. Simply put, when the dollar is bullish, you expect pairs that has dollar as the base currency to go bearish. And if dollar is bearish, you would expect pairs that have dollar as the counter to go bullish. So first, you need to know the strength of the dollar. Okay, so we do that on trading view. Okay. So we need to know the strength of the dollar. Okay, that will determine if we would go bearish on the major currency pairs. Okay, the pairs that have US dollar as counter. Okay. Few minutes, please. It's taking time to load. Okay, while we wait for trading view to load, let's view GBPUSD. Let's start with GBPUSD. If there's anything you want us to analyze, please drop it in the comment section. Okay. while TradingView is loading, let's look at GBP. So the technical tools I use for analysis is the candlestick pattern, okay, candlestick pattern, resistance, and support. I also use fair value gap, which was invented by Michael Odistin, the creator of ICT concepts. Okay, so use candlestick pattern, resistance, and support, demand and supply level. Those are the tools I use for analysis. Okay, so we'll start with the weekly time frame. Okay, it's very important that you know the trend for the week. Okay, very important that you know the trend for the week. Every trade you would execute on lower time frame should align with the higher time frame trend. Okay, yes, you could execute trades that contradicts the higher time frame trend. Yeah, you can, and you can make, if you're a scalper, you can make profits. Let's say the weekly trend is bearish. You could see some bullish setup on maybe 15 minutes to 1 hour time frame. You could execute those trades and you could make some good profits also trading against the trend. Okay, but it's very risky trading against the trend. You make cool money when you flow with the trend. Okay, so this is the weekly time frame. Now you would see last week candle closed what? Bullish. It closed bullish. And that the candle closed bullish indicates that we have more buyers than sellers, meaning there's a high probability for GBPUSD to go bullish. Okay. If you also go back here, you would see we had a resistance here, which became a support. Can you see that? If you go back here also, you would see it was a support here, right? Can you see? If you go back here also, it was a resistance, which became a support. So this zone is a key level because price has tested that level several times. Demand levels have become supply, and supply level has become demand levels. That is why this level is called a key level. And you can see how last week candle tested this zone, demand zone, or you call it your support zone. And you can see there was a strong rejection from that zone. Okay, so should we jump in and start buying GBPUSD? Now, there's something I want you to also observe here. If you go back here, I don't think price hits this. Let's see, did it get there? Okay, so you can also see here, we had, what's it called? A resistance level. Can you see that? So we have a supply zone here too. Can you see that? So price tested this supply zone, and as you can see, there's a rejection from that zone. So we can't just jump in and start buying because last week candle closed bullish. It could be that they just want to test this supply zone, this resistance zone, before going bearish. You would also notice that last week candle didn't close above the high of this previous bearish candle. If this candle had closed above the high of this previous week bearish candle, I would have suggested, okay, let's go bullish on GU. But the fact that they didn't close the price or the market above this price, this tells me there's a high probability for price to go bearish. Okay, so that's it for, on the weekly time frame. So let's move down to lower time frames to see what pattern we have on lower time frame. So you can see the pattern we have on the daily time frame. You can see this is a spinning top after a bullish move. Now, when you see a spinning top, it indicates change in trend from bullish to bearish. Okay, so this is a bearish pattern on the daily time frame. So if I'm to trade GU, I would expect price to break this resistance zone before I will consider buying. Okay, I want to see price break this resistance zone before I buy. But based on the pattern we have on daily time frame, I want to go bearish. Okay, I would go bearish on GU. But if price breaks this zone, then I could go bullish. It means that if I decide to sell GU, my stop loss must be above this zone. My stop loss must be above this zone. I hope you're following. Okay, my stop loss will be above this zone. Let's go see the DXY. Okay, because when we know the strength of the dollar, then we can tell, okay, so let's look at DXY. So we'll start with the weekly time frame. A few minutes, it's still loading. I don't know what's happening. Maybe it's network or I don't just know. So from what I see on DXY, I think DXY is bullish. From what I see on DXY, let's start with the weekly time frame. And like I said, there's so much that is happening all around the world. There's so much uncertainty all around the world. People are scared. Investors are scared. Okay. So much is happening around the world. And in such period, like in such periods, people will invest in gold and dollar. People believe so much in the US economy. They believe so much in the dollar. If they are not investing in gold, they are investing in the dollar. Okay. So fundamentally, the dollar is bullish. Dollar is what? Bullish. Okay, so let's look at the chart together. Let me delete all this. You can see I've done my analysis. I'm already set for the week. Okay, so let me delete these lines. Okay. Okay, so what do we have here? On the weekly time frame, we had previous week was doji. Then this past week closed as a doji, strong indication that the buyers are becoming weaker and there is a high probability for sellers to push price down. Okay, there's a high probability for price to go bearish because the buyers are becoming exhausted. Okay, so we have a bearish reversal pattern, but you know, after the formation of a doji candle, you're not supposed to jump in and start selling, right? Because it's not confirmed that we have lots of sellers in the market, lots of bears in the market for us to go bearish. For us to go bearish on DXY, we have to ensure that a bearish candle closes after the formation of these dojis. We can't just jump in and start selling. You would also notice that we had a resistance here, and I think price tested that resistance. Can you see that? So this could be the reason for this rejection. This resistance is the reason for this rejection. So if they successfully break this resistance level, then we should expect more bullish move on the dollar. I hope you get that. We should expect more bullish move on the dollar. And on the dollar, you can see we have a fair value gap here on the weekly time frame. So if they break that resistance, they are coming to fill this gap. They are coming to fill this gap. This is the fair value gap. The fair value gap is the gap between the low of this candle and the high of this candle. So there's a high probability that if they break this resistance, then they will test this level. Okay, so that's my take on GU. Sorry, dollar index. Now let's go down to lower time frame. After the close of this candle, last week candle, let's see the pattern we have on daily. You can see the pattern we have on daily. Can you see the pattern we have on daily? We had a fair value gap here on the daily time frame. This is the fair value gap, which needs to be filled. Okay, so it's either price we pull back to fill this fair value gap before going bullish. Okay, it is likely price will pull back to fill this fair value gap before it goes bullish, or price goes to fill the weekly fair value gap before retracing back to fill this gap. Okay, now you'd also notice that we had a fair value gap here on the daily time frame. You can see we had a fair value gap here, and you can see what happened. Price filled that fair value gap, and you can see the pattern we have here. This looks like an engulfing pattern. This looks like an engulfing pattern. So if you are considering selling, or if you're considering going bearish on DXY, then you should wait for price to break this support. If price does not break this support, it will not be wise to go bearish on the dollar. So with the pattern we have on the daily time frame, the dollar is bullish. This is an engulfing pattern. Okay, this is an engulfing pattern. So the dollar is bullish on the daily time frame. You might want to wait for price to break this resistance before you go bullish on the dollar. So this week, my bias on dollar is bullish. So it means that I'll be going bearish on pairs that have the dollar as the counter currency. Do you get that? My bias for the dollar this week is bullish. So I'll be going bearish on AU, GU, EU, NU. Then on UJ, UCHF, and UCAD, I'll be going bullish because those pairs are negatively correlated. So I'll be going bullish on UJ, UCHF, and UCAD, then bearish on GU, AU, NU, and EU. I hope that is clear. So that's my bias for the dollar. I'm expecting a bullish ride on the dollar. So let's go back to currency pairs. I hope that is clear for the dollar. I hope that is clear. Can you all hear me? Can you all hear me? If you have any question, just drop it in the comments. I will attend to your questions before we end the class. Okay, so we've analyzed dollar. We should also look at the fundamentals. Okay, we should also look at the fundamentals. Okay. So the reason you should look at the fundamentals is to know when the market will be very volatile. Okay, that is one of the reasons you should consider looking at the fundamentals. Okay, you should know when there will be volatility in the market. When there's volatility in the market, very easy to make money. Okay, very easy to make money when the market is very volatile, and it's very easy to lose money too. You just have to know what you're doing. Okay, but we want to be sure there's volatility in the market before we execute our trade. So tomorrow is Monday. We're expecting the major news. I focus more on major news. So all these news in red folder, red color, are major news. So I focus more on major news. I'm not interested in major impact news. The major news are the driver of price. Okay, they are very volatile. When market becomes very volatile, when they are released. So I focus more on the majors. So I'm going to filter out what's it called? The medium impacts. So on Monday, we are expecting a major news from Europe, German prelim CPI, that's consumer price index, which is a major news. So we should expect high volatility on Euro pairs tomorrow. Okay, so if you're trading Euro USD, Euro Australian dollar, Euro JPY, you should expect volatility on Euro pairs tomorrow. Then on Tuesday, we're expecting, I think this is from China, manufacturing PMI, non-manufacturing PMI, that will impact yen pairs, okay? Yen pairs, okay? Then same Tuesday, we're expecting this from Canada, GDP, that's gross domestic products, okay? Gross domestic products. If GDP is high, it will be positive for the country. And if GDP is low, it will be negative for the country. Okay? The reason the Naira keeps losing value, one of the reasons the Naira keeps losing value against the dollar is that our GDP is low. Okay? That's one of the reasons. 2 minutes, please. Okay, so okay. So we have the majors here. So Monday, Euro, Tuesday, CAD and US, and also New Zealand dollar. These are major news. Okay, so on Monday, we should expect volatility on CAD pairs by 1:30. Also on USD pairs, we should expect volatility by 1:30 p.m. Okay, then on 11:45, we should expect volatility on New Zealand pairs. That's 11:45. Then on Wednesday, we have several major news. Several major news will be released on Wednesday from the United States. So Wednesday will be a very volatile day. The market will be very volatile on Wednesday. If you are not willing to take high risk, please avoid trading on Wednesday. Okay? If you are not comfortable taking high risk, please avoid trading on Wednesday. Okay? This is why you should check the news. This is why you should check the fundamentals. Okay? Wednesday will be very volatile. Very volatile. Then Thursday also would expect news from Swiss franc, CHF, and also the dollar and CAD. So this week will be very volatile because it's a non-farm payroll week. It will be very volatile. It's a risky week to trade. Okay? It's a risky week to trade. If you know how to trade NFP, you can make a lot of money, but it comes with high risk. It comes with high risk. Most times when NFP news is to be released, it's expected. Most times price will be in a range on USD pairs. It will be in a range until NFP is released. Most times. Okay? So those are the major news for the week. Those are the major news. If you want to trade the news, all you have to do is compare the actual value with the forecast value. That's all you need to do. Okay? For example, Euro CPI, what is the forecast here? 0.6. The previous is 0.4. If the actual value that will be released tomorrow is higher than the forecast value, then you should expect Euro to gain value. Euro will appreciate if the actual exceeds the forecast. If the actual is less than the forecast, then Euro will lose value. that is how you trade the news. You compare the forecast with the actual value. I hope that is clear. I hope that is clear. Okay, so that's it for fundamentals. So like I said, I'm bullish on dollar. So I'll be going bearish on GU. Let's start with the weekly. Okay, we've already looked at the weekly charts. Okay. Now, if you also look at the, let's see, I saw something here. So that's my take on GU. I'm going bearish on GU this week. So daily we have what looks like a bearish reversal pattern. And let's go weekly. Sorry, 4 hour. So what do we have? You can see on 4 hour, we have a fair value gap here. On 4 hour, they might want to push price up to fill this gap before going bearish. Okay, they might want to push price up to fill this gap before going bearish. Okay, so I wouldn't just jump in and start selling GU. I want to see what price will do on Monday and Tuesday. Maybe my first trade on USD pairs might be on Wednesday. Okay, so they might still want to push price up to fill this fair value gap before going bearish. Now that is clear. So for those who are considering buying, there's still opportunity to make some profits. Okay, but I don't want to trade against the trend. I don't want to trade against the higher time frame trend. Okay, so I'll be considering selling. There's opportunity to buy here. Look at what we have on 4 hour. You can see this candlestick tested. You can see we had a support here. You can see also at this point it was a resistance which became a support. This is a key level. So price tested this level, and you can see the pattern we have here is a bullish reversal pattern. So this pattern is likely going to play out before the higher time frame pattern will play out. I hope you get that. So 4 hour is likely going to play out before the weekly and the daily pattern will play out. Okay. So there's opportunity to still buy it to this zone before it goes on bearish. So I think I'll be considering selling at this zone, these levels. Okay, because if you apply a Fibonacci, let's take it from this swing high. From this swing high to swing low. Okay, so price just closed above it crossed equilibrium, which is level 50. So want to see price push up to a premium level, it should be around 71.5 or above 71.5. That will be the best area to consider selling GBPUSD. I hope you get that. That will be the best area to consider selling. Okay, it's not a good area to sell. So let's look at which other pair. We don't need to look at Australian dollar USD, Euro USD. It is positively correlated with GBP/USD. If you go to Australian dollar, you're most likely going to see the same pattern, similar pattern on Australian dollar. Let's just look at it. Let's start with the weekly. So you can see the pattern we have here also is similar to what we saw on GU. Okay, so this is bullish. Okay, this looks like an engulfing pattern. Okay, this looks like an engulfing pattern. And if you go down to daily, let's see what we had on daily. So on daily, you can see we had a fair value gap here on daily. I want to come and fill this fair value gap before going bearish. Okay, they now want to fill this gap before going bearish. Price tested this level, but it has not filled this gap. Okay, so if I'm to sell Australian dollar USD, I want them to fill this gap. Okay, if we apply Fibonacci from this swing high to this swing low, Okay, so I want price to hit 71.5 or above. This area I will consider selling Australian dollar USD. Okay, this area I will consider selling Australian dollar USD. Let's see what we have on 4 hour. So you can see what we have on 4 hour. This is an hanging man, and this next candlestick closed bearish. Okay, you could see the reason I wouldn't jump in and start selling is this. This candle didn't close below the low of this bullish candle. Can you see that? If this candle had closed below the low of this bullish candle, I could have considered risking, selling Australian dollar USD when the market opens. But the fact that there was a strong rejection from this, the low of this candle, you would also see that we had a support here, resistance, which became a support. Here also we had a resistance, which became a support. Price tested this zone, and there's a strong rejection from that level. See, that's the reason I won't sell Australian dollar USD. If you are considering buying, if the market's a candle, let's say 4 hour candle closes above this resistance, you might want to risk buying. Okay, buy. Your stop loss will be few pips below this level, while you aim for this level, okay, above 71.5. You will set your TP above 71.5. I hope that is clear. So that's my take on Australian dollar USD. I'm looking for a sell setup, but like I said, they might still want to push price up to fill this fair value gap on the daily time frame. For those of you who are considering buying, there's still opportunity to make money buying Australian dollar USD. But like I said, I don't want to trade against the big players. I want to flow with them. I want to flow with the institutions. Okay? So let's look at gold. Like I said, gold is still bullish. Gold is still bullish. GJ is still bullish. So gold, let's start with the weekly time frame. Let's just see the monthly time frame. I think the monthly candle will close on Tuesday or Wednesday, right? So this is the monthly candle. Let's go down to weekly. Okay, so what we have here is a bearish pattern. Okay, this is a bearish pattern. So this week it's likely gold will be bearish. Okay, it is likely gold will be bearish. I want to apply my Fibonacci on gold. I'm going to take it from this swing low to this swing high. Okay, so if you are considering buying gold, I expect gold to pull back to a discount level before going bullish. That's my take on gold. I want to see gold pull back to discount before I will go bullish on gold. Okay, but with this pattern we have here, you can see we had a shooting star, which is a bullish shooting star. Then we have what looks like a spinning top. Now, because the body of these candles are bullish, we can't just jump in and start selling. The last week candle closed bearish. This is a bearish reversal pattern. Okay, this is a bearish reversal pattern. So we should consider selling gold. If you're buying, wait for price to pull back to a discount level before you buy gold. Okay, so here also the pattern we have here is a bearish reversal pattern. It's a bearish reversal pattern. Remember, I told you several weeks ago that I want to see gold break this support before I would go bearish. And this candle broke out from this support. This was the zone I was expecting gold to break before I would go bearish. And this candle has broken out from that level. So it's likely we just want to fill this fair value gap that was created. Okay, we have a fair value gap here. So they are likely going to fill this gap before going bearish. That's my take. So if you're working with the 4 hour time frame, to apply my Fibonacci on 4 hour time frame, I'm going to take it from this swing high to this swing low. Okay, so I want to see price push up to a discount, sorry, premium before going bearish. Okay, so like I said, they might want to fill this gap on 4 hour. This fair value gap that was created on 4 hour before going bearish. A lot of retail traders would have jumped in to sell gold because of this candlestick pattern that looks like a shooting star. And most will have their stop loss at this level. And there's a high probability they will hunt for their stop losses before going bearish. So there's a high probability they will push price up to fill this gap, clear liquidity, buy side liquidity at this previous high. That was last Friday high before going bearish. Okay, that's my take on gold. And if gold breaks this resistance, then we should expect more bullish move on gold. So this week, my bias on gold is bearish. My bias on gold this week is bearish. I want to see price fill this gap, this fair value gap, before going bearish on gold. I hope that is clear. Let's look at GBPJPY, and that could be the last pair for tonight's session. Gold just cleared liquidity. I think this was the all-time high, right? Okay, we still have, okay. All-time high is still at this level. Okay, so it just cleared liquidity at this previous high. It's likely going to hit this level. Like I told you, I think the reason for this bullish move on GJ is because interest rates, Japan interest rates is low. It's low. I think a few weeks ago, they moved out from negative interest rates. So that's the reason JPY is weak. JPY is weak because of the low interest rates. It's a high probability. Now it has cleared this liquidity. It's going to aim for this next liquidity. Breaks this liquidity, it's likely going to aim for this liquidity. Okay, so with what we have here, GBPJPY is still bullish. But personally, I wouldn't risk buying GJ at the current market price. I told you guys, when you open the chart, the first thing you should look at is where price started going up or started going bearish, where you ought to have entered the trade. That's the first thing you should look out for. So you can see GBPJPY has been bullish for months, for years, okay? It's been bullish. So let's look at the weekly. So you can see from this point, it's been bullish. So buying at the current market price, for me, it's very risky. It's very risky. If I want to buy GJ, I want to see price pull back. I can't buy GJ at the, because I see that it's overbought. It's at overbought level. Okay, it's overbought. So if I'm to buy GJ, I would apply my Fibonacci from this swing low to this swing high. I want to see price pull back to discounts, which is below 50. Okay, I want it to get to, let's say, 71.5. This is where I will consider buying GJ. GJ is still bullish, but I can't buy at this point. Okay, I think GJ is expensive. Okay, it's at premium at this level. So I want to see it pull back to discounts before I will buy. That's my take on gold. On GJ. GJ is still bullish, but I want to see price pull back to discount before I'll buy GJ. Okay, so that will be all for tonight's session. I appreciate you all for your participation. If you have any question, you can drop it in the comment section. All through last week, we didn't have a daily live stream, and that was because I was very busy, okay, taking students offline and online. That's why I wasn't available last week. Okay, hopefully this week we'll meet on Tuesday and on Thursday. Tuesday and Thursday, 10 a.m. Okay. Any question? If you have any question, please. If you want me to unmute you, just raise your hands up. If you're in a noisy environment, just drop it in the comment section. Mr. Said, do you have any question? Mr. Evans, Michael, Infinite Smarts, Lovett, Mr. Paul, Mr. Joseph, Mr. Theophilus. Any question, any question? For those who are new to trading and you would like to learn my unique strategy, my winning strategy, you should get my Forex Mastery course, which gives you access to my mastermind group. And it costs just 10,000 Naira. For those of you who are new and want to learn how I analyze the markets, you want to learn my strategy, you can get it today for just 10,000 Naira. Previous week, I released it for 5,000. It's now 10,000. I don't know how much it's going to cost next week. Okay. So if you can afford it, get it now. Get it now. The benefits of joining the mastermind group is that you would have access to Zoom sessions. This session was supposed to be for the mastermind group, the VIP students. So I just said, okay, let me give everyone access to the class. Okay. So if you're in the mastermind, you have access to Zoom sessions. At least we meet 3 times in a week. And every trade I execute in the market, I post it in the group. Okay. And if there's any modification to my strategy, you will get to know. Any question? Okay, Mr. Theophilus is good. Okay, Michael is good. Who else again? Mr. Joseph? Since there are no questions, I would have to end the meeting. I appreciate you all for your participation. I really appreciate you all. I really appreciate you all, Mr. Said, Mr. Evans, Michael, Infinite Smart, Lovett Okeke, Mr. Paul, Mr. Peps, Theophilus. Our next class will be on Saturday or on Sunday. For those in the mastermind group and the VIP group, we'll be meeting Monday, Wednesday, and Thursday. Okay, as you know, the conversation continues on WhatsApp. Wish you all a profitable trading week. Please, like I said, this week, the market will be very volatile. Please be conservative. Don't over leverage. Every trade you execute, ensure that you apply stop loss. The secret to successful trading, to consistently making profit from this market, is risk and money management. It is risk and money management. The temptation would come for you to over leverage. The temptation will always come for you to just take this for this one time, over leverage. And that one time that you fall for that temptation, that is when you blow your account. That is when you blow your account, or you would experience a huge drawdown that might take you months to recover from. You don't want to put yourself in that position. Please don't try to flip your accounts or double your account in the short term. Think long term. I've always told you guys, think long term. Think long term. Okay? Forex trading is not Ponzi that will crash tomorrow. Okay? I understand why some of you are rushing it, because you came in with this Ponzi mindset that this business might crash. So let me make the money that I need to make before it crashes. Forex is not going to crash. Okay? The Forex market will never crash. It's only when people stop traveling, when people stop doing importation and exportation, that is the only time the Forex market would crash. And you know that is not possible. People will travel, people will import, people will export. So the market is here. It's here. It's not going anywhere. So take it easy on yourself and on your capital, please. Someone's hand is up. The hand is down. All right, that will be all for tonight's session. Do have a wonderful night. The replay will be available on YouTube hopefully tomorrow. Good night. Good night.